This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Steve Hoffman. Steve, thank you for joining us.
It's great to be here.
Great. So what was your background before investing in early stage companies? What did you do before this?
Well, I did a lot of things. I worked in Hollywood. I did animation. I did voice acting. I made games. I did all sorts of things. And I ran 3 venture-funded startups. And then I launched a startup incubator called Founders Space. And that began here in Silicon Valley. And that's what kicked off my investing career.
Oh, great. So what excites you right now?
Right now, there's a lot going on with the coronavirus, with the stock market, and with startups. It's a crazy time. So I work globally. Last year, I spent 70% of my time traveling around the world working with startups. We do a lot of work in Asia. We have incubators all across China. We're pretty heavily in South Korea and Australia and Taiwan and other places. We also collaborate in Europe. And so I'm seeing startups globally. And I will tell you, different markets are different. Like in China, even before the coronavirus hit, it was very tough for startups. In fact, kind of the bottom dropped out of the early stage market for funding startups. So the early stage Chinese companies, they've been suffering for a while. And the outbreak of the virus has only made it more severe. Here in the US, we were humming along nicely until just recently, and now we're all waiting to see what will happen. I will tell you, any big uncertainty like this, investors become more cautious. So entrepreneurs out there, they're going to see investors taking more time to make decisions and making a more conservative bets, which usually means that earlier stage companies become less attractive. But we've also seen a lot of the bets in later stage companies that were overvalued and overhyped, like WeWork and others, have not quite panned out. So I think we're in I think the tide is changing. I think if you're a startup out there right now, it's a good time to grab the money and tuck it under a mattress because you will probably need it in the future. I don't see things rebounding super quickly. I could be wrong, but I see it becoming more difficult. Now, on the positive side, the venture capitals is still flush with money. There's a lot of money in Silicon Valley. New funds are raising money. Established funds have raised a lot more money. So there's still a lot of money out there. We just got to, and those investors have to put that money to work. So that's the good thing. It's not going to go away overnight, but I think it's not going to be the heyday anymore like it has been for the past 5+ years. It's been really good. So that is my prediction.
Oh, great. So on the other side of that table, what's your advice for people investing in startups at this time frame? What do you tell them to do before they write that check?
If you're investing in startups, you're looking at a 10-year horizon if it's an early stage company. And I do a lot of early stage investing. If you're looking at a later stage company, who knows? I mean, right now, IPOs are on hold. And acquisitions are also slowed way down. So we've got to see how quickly the US economy and the world economy bounce back. And it is very foggy out there. I mean, it is hard for me to discern right now, given the situation, whether we're in for a really long period where we're not going to see a lot of IPOs and acquisitions are going to slow down and profits are going to go down and everything, or whether this is just a temporary blip. By temporary, I mean a year or so. That's the shortest I can see it. In either case, if it's even in a downturn, like after the internet bubble burst, there were great opportunities out there. You know, Google and Facebook and all these companies were out there after the internet bubble burst, even after a financial implosion like the 2008 financial crisis. there were still great startups out there at bargain prices. So the core is knowing how to identify a company that they really have something. They really have something in the marketplace that is defensible. They really have something with their business model that works. And so I spend a lot of time, because I work with a lot of startups, digging deep on this. I want to know that the fundamentals of the startup work. I'm not investing on momentum. I try not to invest on hype, but really dig below the surface. And I think if you do that and you find the right team with the right positioning, and they're using technology in a new way to create value, there are some good deals out there, and those deals will get better during this volatile time.
So you've talked about the state of investing changing because of COVID-19, but in general, startup investing is always changing because of new technologies and new fund models. How do you see in the bigger picture, the longer term, how do you see the industry evolving in upcoming changes that might come in for startup funding?
So my belief is that their technology is always advancing. There will always be new opportunities. So it's investing in startups is not coming to an end by a long shot. For as far as I can see into the future, if the world doesn't implode or we have some major disaster, there is going to be a healthy market for investing in entrepreneurs and new companies. And so what I look for in the marketplace, like my kind of approach to this is I invest in tech startups. That's what I do. And I almost never invest outside of tech. Now within tech, I'm pretty flexible. I don't just pick one type of company. So I'm always looking for new technology coming into the marketplace that an entrepreneur can grab a hold of. Usually the entrepreneur didn't invent the technology because it takes years, sometimes decades to invent a new technology. They've usually innovated upon it, are using it in a new way to solve problems. And then I look at the type of problems they're solving, whether they're big value problems. By big value, I mean to the customer, whoever their customer is, it's really, really important. And if that aligns and the technology that they're using gives them an edge over all the incumbent players out there, then that's a company I start to get excited about.
Well, that's great. So what's your investment thesis for startups in general? And do you have any startups that fit that thesis that you can tell us about?
I do. So like I said, I'm mostly in the early stage because I run an incubator and accelerator. So with Founder Space, I'm always looking for startups that are coming up. Now, I do not invest in just a solo founder with an idea. That's too early for me. And those ideas change all the time. I'm really looking for a little beyond that. So I would like to see a team of at least 2 people, preferably more, that have gotten together and have actually developed at least a working prototype, and they've gone out into the marketplace and gotten customer feedback. So I can call those customers, or I can look at what they've done and have some data to go by that this works. So that's the core thing. I do invest in later stage companies. We're working with a number of them that are more mature, but most of my time goes into both educating and helping and accelerating these early stage companies. Now, what criteria I look for is I don't care so much if the startup has developed their own proprietary technology. What I really care about is that they are taking technology and using it differently in a different way to create value than other people that came before them. So that when I go to that customer, they can tell me, this startup here, they're actually helping us in a way that no other company is. And the reason I like technology is not just because it's technology, but because new technologies open up new doors and new opportunities, and really smart entrepreneurs it's their job to figure that out. So it's much harder to move into a traditional business without any technology and really upend things, really change how things are done and get a big outcome. But technology allows a small group of people a few founders to actually do this very efficiently. And when we look at technology, one of my theses is I like software more than hardware. So the problem with hardware is it takes time to develop. It can be easily copied. Like you look at all these manufacturers, factories in Shenzhen, they can look at what you post as soon as you reveal what you have. And a month later, they can copy your gadget, your IoT product, whatever it is, they can copy it. It's really hard unless you have years of research and really airtight patents around something to protect hardware. So most of my investments, they might use hardware, but the real value is in the software because software is flexible. You can change it, you can deploy it, and you can scale it so much easier than hardware. So that's number one. I look for companies that I like B2B companies, especially like SaaS-based companies. Those tend to attract me because I can go to their customers as an investor and I can talk to them and get clear feedback. If it's a consumer-based product that hasn't launched yet and doesn't have a lot of traction, or it's just launched and there isn't a lot of traction yet, it's much more of a crapshoot. You're out there and you just don't know until this thing really takes off in the consumer world, whether it's going to go or not. So those are a couple of my theses. The third one, and I'll stop here, is I like companies with recurring revenue. So if they're out there and they sell their product once to a customer and then they have to go out and acquire a new customer in order to make money, which is a lot of these hardware startups that make smartwatches or smart gear or whatever it is, they're always having to acquire new customers. It is really hard because that's the biggest expense a startup has. But if a startup can go out there, grab a customer, bring them in, and then continue to get revenue from that customer over the entire lifetime they're with the product, and hopefully it's a long lifetime, that is the type of business model that gets me excited.
Oh, great. So you deal with a lot of startups in your business. What are the challenges that the startup faces today? If you had to pick the top one or two challenges you see your startup struggling with, what would it be?
To me, when I talk about early stage startups and sometimes late stage startups, the biggest challenge for most startups is the product market fit. They just nailing a good product market fit where you have something that your customers need and you are really the best option. I have like two criteria for product market fit. Number one, if your product is really going to take off and be something that I, as a venture investor, an angel venture investor, want to invest in, you have to have either one of two things. That product you have has to be different than all your competitors, substantially different, not just a little different, or it has to be exponentially better. If neither of those are there, most customers, they don't want to change. They're already using whatever they're using. It could be they're using Instagram and you come out with a new messenger. It's not going to compete if it's just a little different or a little better. Or they're using some SaaS product or B2B product. They're not going to switch. People don't switch. So that is what I look for.
Great. So you see a lot of different applications and sectors out there. If you had to pick one or two that you think are good opportunities today for investors to pursue, what would you put at the top of the list?
Wow. I've done a lot of investing and working with startups using AI. I really like AI because AI has been one of these solutions that can be these technologies that can be applied to so many problems. And we've seen a huge number of startups going out there and doing this. So for me, AI is still attractive. I think there's still a lot of room for AI to go, right? We're not at the tail end of AI. I shied away from blockchain startups because in the blockchain, what I saw was blockchain it was designed originally to facilitate cryptocurrency. And when it was applied to other problems out there, it wasn't the ideal solution in most cases, because in most cases, they didn't want a decentralized system. That's not to say blockchain won't be valuable in the future for big corporations and companies like that, but I think it's a more niche technology than, for example, AI. So the sectors those are kind of the core technologies that I'm looking at. I'm interested in everything. I'm looking really excited, although I haven't seen the big market opportunity yet for brain computer interfaces. I'm very excited about the whole space tech field with, Elon Musk kind of pioneering the way. There's an opportunity out there for building not just big rockets like the Heavy Falcon or trying to compete with Musk and Bezos and others. There's a big opportunity out there for all the little pieces of infrastructure that will be needed by these big companies as they actually go out there and pioneer space. Fintech has been a super exciting area. I sort of stayed out of crypto for the most part. It's kind of a gambler's game, but there's a lot going on in banking, insurance, all these different areas of fintech where startups are doing incredibly well, and I'm very excited. Biotech, it's been on a roll for a while now, and especially if you look right now at CRISPR and gene editing technologies. For me, those are the most exciting areas. There's just so much there's so much potential for these new gene therapies and CRISPR, editing the DNA of plants and animals. It's absolutely mind-boggling once you start to go into it. And so the right team that's applying that technology to create a new product or solution out there, I'm always interested in.
Well, there's certainly a lot of good opportunities out there. In the last few minutes that we have, what else should we cover that we haven't?
Well, I can tell you about a few things. So, number one, I wanted to mention I have a book out there, actually 2 books. So one is Make Elephants Fly, and it's a very popular book. It's all about how startups innovate, come up with new ideas, and kind of succeed in the marketplace. And then my latest book, it's not out on the market yet in the US. It just got picked up by HarperCollins, and it's called Surviving a Startup. And it's for all those entrepreneurs out there who are struggling to survive. Everything you need to know to kind of get it to the next level and keep going. There's another thing I wanted to talk about is kind of some advice for entrepreneurs out there who may be listening and are pitching to investors on what to do and how to reach investors, because I get pitches all the time from entrepreneurs. And some of the core things that I see entrepreneurs do wrong is they talk about their idea, but they don't back it up with enough data. So if you're out there pitching to an investor, and this is what investors want, you have to think about it as proving to them that your big idea, that amazing thing you have in your head, actually works. Now, this is why investors who are supposed to be venture investors are actually pretty conservative. They all pile in to these unicorns because the unicorns have usually, but not always, proven out their business model. They've proven the product market fit. But even before, in the early stages, you have a product market fit, there is a lot of data you can get. And this is what entrepreneurs fail to realize. They just go in there with their PowerPoint. But I'm telling them, the PowerPoint isn't enough. Like when you go into a pitch an investor, if you have a physical product, like something real, like let's say you're a food startup and you're doing some food tech, bring in the food or bring in the technology. Let the investor get hands-on with it. You would be surprised how excited investors get when you can actually use more of their senses, like their taste and their smell and touch. If they can touch your product, if they could taste, if you come up with some amazing new, if you're doing one of these lab-grown meats or whatever it is, you can let them try it. These things make a big difference. The other area in pitching investors that I like entrepreneurs to think about is don't spend too much time with any one investor. I am sorry. Like, I've been in your shoes. I've been an entrepreneur. I wasted so much time with investors who said they were interested but didn't act. You really have to give investors a deadline. So when you go into an investor and you're pitching to them, you have to do is say, look, I'm going to show you everything you need to know. I'm going to let you ask every question you need to ask, but then you have to make a decision. So you have to put them at a point where they either walk away or climb in bed with you. One or the other. You have to put them at a point where they get off the fence. That is the most important thing to closing funding. And I have lots of other advice, but I'll leave it for another time on another podcast.
Well, it sounds like good advice. And how best for listeners to get back in touch with you?
Oh, you can reach me at founderspace.com. Go to Founderspace. There's tons of actually videos there and free educational materials for entrepreneurs. And we have also Founders Edge for investors. And if you're an investor and you want to sign up, go to Founders Edge. We actually connect you with startups all around the world. And you'll see we're working with corporations and a lot of early stage companies. So if you're interested in that, go to Founders Edge. And you could email me if you want to email me at VC, venture capital, VC at founderspace.com. And I look forward to hearing from everybody. I love what I do, and I love collaborating, especially with really passionate entrepreneurs.
Great. I want to thank you for joining us today and hope to have you back for a follow-up soon to get the rest of your advice, and appreciate your taking time.
Thank you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hoffman Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.